Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Anhui Expressway Company Limited annual report. Anhui Expressway Company Limited offers a diverse range of businesses and services. At its core, the company is involved in the construction, operation, management, and development of toll roads and associated service sections within the People's Republic of China. The company owns interests in numerous expressways across Anhui Province, including Henning Expressway, New Tiancheng section of National Trunk 205, Geaji Expressway, Xunguang Expressway, Ninghui Expressway Tiancheng section, Lianyu Highway Anhui section, Guangxi Expressway, and Ningxuanheng Expressway. Additionally, the company is responsible for the Anqing Yangtze River Expressway Bridge and Yuyu Expressway Anhui section. Beyond its infrastructure development, Anhui Expressway Company Limited also provides pawn loan services to its customers. This indicates a broader business strategy that extends beyond road construction and management to include financial services. Overall, the company's diverse portfolio of businesses and services positions it as a significant player in both the transportation and financial sectors within China. Anhui Expressway Company Limited market capitalization of 32 billion is significantly larger than the average industry peer of roughly 5 billion. This shows that Anhui Expressway Company Limited holds a significant advantage in their industry. Anhui Expressway Company Limited trades at a higher price-to-earnings ratio of 12 times and a higher price-to-book ratio of 1.74 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.6%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the company's financial performance can be identified through an analysis of various factors. Revenue growth is primarily driven by toll income from expressways such as Xunguang Expressway and Fuzhou Expressway, which have seen significant increases in toll revenue. Additionally, service income from managing toll roads has also contributed to revenue growth. The empowerment by digital and intelligent technologies, deepened reform of state-owned enterprises, and diversified transformation of business operations have also played a crucial role in driving revenue growth. On the other hand, revenue decline is primarily attributed to toll revenue from expressways such as Henning Expressway and Ningxuanheng Expressway, which have seen significant decreases in toll revenue. Rental income from various expressways has also declined significantly, with a decrease of 87.5%. Revenue from construction or upgrade work under service concessions has also decreased by 51%. In conclusion, the company's financial performance is heavily influenced by its ability to manage and optimize toll revenue from expressways, as well as its service income and rental income. The adoption of digital and intelligent technologies, deepened reform of state-owned enterprises, and diversified transformation of business operations have also played a crucial role in driving revenue growth. The company's financial performance has undergone significant changes in recent years. On one hand, the statutory net income has seen an increase, indicating a positive trend in the company's profitability. This growth can be attributed to the expansion of its main business and external investments, which have contributed to the company's overall revenue. However, a closer look at the profit margins reveals a different story. Initially, it appears that the profit margins have decreased compared to the previous year's reported value. However, this trend is contradicted by another statement on page 27, which suggests that the profit margins have actually improved due to increased competitiveness and profitability. This apparent contradiction highlights the complexity of the company's financial performance and requires further analysis to understand the underlying factors driving these changes. The company's financial performance indicates that it is indeed generating positive operating cash flow. This is a crucial aspect of a company's overall health and sustainability. A positive operating cash flow suggests that the business is able to cover its expenses, invest in growth initiatives, and reward shareholders without relying on external financing. The company's debt level and interest expenses have undergone significant changes in recent times. An examination of the data reveals that the total debt level has risen by a substantial 10.6%, increasing from RMB 27,538,089 to RMB 30,443,842. This increase is even more pronounced when looking at the total liabilities, which have surged by an impressive 69.3% over the same period. Furthermore, interest expenses associated with borrowings have also seen a notable rise of 11.2%, amounting to RMB 24,345. Moreover, the overall finance costs have experienced a significant increase of 71.1%, totaling RMB 123,750. These changes indicate that the company's financial obligations and expenses are on the rise, warranting closer examination by stakeholders and management alike. Management is maintaining its current strategy despite new accounting policies. They are optimistic about the company's outlook, citing several key areas of focus. The main business scope remains highway construction, management, and operation, with a particular emphasis on expressway operations. The company plans to seize major strategic opportunities in the expressway industry by strengthening and expanding its core business through external investments. This includes significant investment in Anhui Expressway Co. Limited of RMB 29.03 billion. Additionally, management aims to expand asset scale and extend toll collection periods, ultimately enhancing overall competitiveness and profitability. The company will also continue to deepen reform and innovation initiatives, including improving incentive mechanisms, accelerating asset securitization, and advancing diversified business operations. Furthermore, the development of smart transportation will be further deepened in the next 5-year plan period. The company has a history of paying dividends to its shareholders. In the past 2 years, it has paid out significant amounts, with RMB billion, 31,990,000 in 2025, and RMB 996,825,000 in 2024. This demonstrates the company's commitment to returning value to its investors through dividend payments. On the other hand, there is no evidence of share buybacks by the company. Unlike some of its peers, it has not utilized this strategy to reduce the number of outstanding shares and potentially boost earnings per share. That concludes the financial summary for Anhui Expressway Company Limited. Feel free to comment below, and I will be happy to answer them when possible.